In order to survive in this world, you'll have to earn some sort of income. In order to earn an income, you generally need some sort of skill set. Most people can start working in high school at around the age of 16 years old. From then, you can work till you've reached around 60 years old, and once you start hitting your middle age, which is around 40 to 50, it'll be more and more difficult to find jobs, and that too high paying ones. Your ability and time frame to work can be shown on a graph. Up until 40, 50 years old is when you have sufficient energy to put into your job. From then, your energy and ability starts to decline until you retire. Of course, there are always exceptions, such as those with unique skills, knowledge, or ability. Aside from those exceptions, most people have around 20 years from when they start working to when they end where they have the most energy and time to work. This is also known as the sweet spot. After this period, both your energy and time will likely start declining. Hi, this is Newfire, back with part 2 in my 8-part series on what is financial literacy. So as I talked about in my previous video on how to achieve financial independence, there are two types of income: active income and passive income. In order to be able to start earning a passive income, you first need an active income, from which you can take part of the money you earned and put it into some form of investment. As Warren Buffett said, if you're not making money in your sleep, you will be working until you die. It's important to start building your passive income as soon as you can because it will be very helpful to you 10, 20, 30 years down the line. The active income you need to earn is not only based on your skill and what kind of labor you are fulfilling, but also your location. Different areas pay different salaries based on the cost of living for that area. But regardless of where you live and what your expenses are, you should set aside at least 25% of your income to invest. Some of the most lucrative fields in the workforce are doctors, nurses, engineers, pilots, bankers, etc. All of these require not only a skill set, but a well-developed and established one. After you start generating an active income, you can start looking at generating your passive income, and this can be composed of different types of investments. The traditional types of investments are real estate, stocks, and bonds. You can generate your passive income through one of these investments or all three of them. To increase your active income and thus have more money to invest in your passive income, you can focus on either getting a better education or building a well-developed skill, whichever suits your needs to make more money in your chosen field. Your end goal for your passive income to be able to pay for all of your expenses. When that happens, you've officially achieved financial freedom. It's imperative that you do this as fast as you can and during your aforementioned sweet spot so that you can utilize the period when your energy and time is at its peak. This will definitely help you down the road as you grow or your family does, and the time comes when you will need the money that you saved and earned. One thing to know is that regardless of whatever income and level of income you make, if you live in America, Uncle Sam will always take a share. We'll talk more about that in the next video where I cover all kinds of taxes, including income tax, property tax, and sales tax. Thanks for watching, and look out for part 3 of 8 of my series on financial literacy. This is Newfire, signing out.